Good evening and welcome to my end of the week recap here for the S&P 500 and plan ahead for next week. Just a quick recap from Wednesday evening. I was looking for support plays at the 8 EMA and 21 EMA, both these blue and yellow lines here on the daily time, or excuse me, the intraday time frame. The trades I ended up taking off of those levels Thursday ended up trailing me out of these 268 calls at 520 from my entry down here at 336. Very nice trade there. Did not take another entry off of that, pierced below, did not give me a break above a green candle until it was below the 8 EMA. Missed an opportunity there because it did run up and provide a decent little bounce right there. But I was patient, waited, rolled over, came down to the 21 EMA. Price action put in some decent volume here. You can see right here on this lower wick, looked like a false breakdown, so I got into some 15 June 270 calls at 310. Price action hit the VWAP at the end of the day. Looked like it was going to roll over and come back down, so I did take some risk off there at 332. Locked in some profits. On the open today, just simply trailed my stop, and this wide range bar took me out here on a couple of fills between 412 and 389. Massive slippage there. I wanted to get out closer to 415, 420, but it is what it is. Still locked in some good profits. Left some on the table though, as it did roll up to about almost $5 a contract here when it peaked at about 274. Now onto my trade plan for Monday. Levels I'm going to be looking at, same as always. 8 EMA, looking at 272 calls about 2 weeks out. 21 EMA, this yellow line right here, 270 calls about 2 weeks out. I still have this green line here as far as being 270 is an important level, just a nice round level to keep on my mind. Anywhere from there to 271.30, which is the high of this peak right here. If price action does roll down below there, I'll be looking at 268 calls about 2 weeks out. I'm not putting a plan for puts on here, but if price action does start to roll through these levels, comes down 270, chops around, and then breaks, I will take puts down to the 50 SMA just to lock in some profits. I'm still holding the June 2019 325 calls as well as August 295 calls. Below the 50 SMA is also the 200 SMA, and right there I'm looking at 265 calls about 2 weeks out in the future. Now, if price action breaks above this green line, which is this 274 consolidation zone over here on the daily time frame, I will look for 275 calls approximately 2 weeks out. Stop loss will be just below there, probably down to where the VWAP is right there. It's 75 cents, basically 3/4 of the delta of those calls. Target for that entry is going to be up here around 280, between the 278 and 280, which was where the last breakdown and sellers really took over on the tape over here in March. So that's going to be my entries, my targets, and stops for Monday on the open. Just want to touch over here on the monthly and weekly time frames. I've mentioned these levels a couple of times here. The high of April was 271.30, which is why I'm still holding that level is very important. Anywhere from 271.30 down to 270. Weekly time frame, it's a lot more evident as far as what's going on and why that level is important. It was a very noticeable peak where sellers did take over. When resistance is when resistance is broken and your price action closed above it, you can consider that to be turned into support and look for price action to continue higher from there. This overall W pattern should work well, as it is simply in a pullback or a consolidation pattern. So push above here, test 280, consolidate, break out up to this 295 level for a new all-time high. That's my plan for the S&P 500 going forward. If you have any questions or comments, please feel free to leave them down below. You're welcome to come join me at the Trade Crew chat room. It is a free chat, and follow some of these plays live. Have a good weekend and good luck.